Hey everyone, welcome back to the REI Marketing Secrets podcast. Today on the show, we have Erika Brown. And Erika, for our audience out there who is just learning about yourself for the very first time, do you mind just going into a little bit about your background and how you got started in the real estate space?
Yeah, absolutely. I'm Erika Brown. I'm a founder of two companies. One company called the Owning It and Living It Community, and the other one called Strive Real Estate Group. And I do a lot of different things in real estate. I originally was in the finance industry for about 9 or 10 years and on the banking side. And just after like hitting a glass ceiling, deciding to have more autonomy over my time, I decided to get my real estate license, which then eventually led me into investing as well. And so I have a portfolio that I invest. I have a pretty good sized portfolio that I invest between Georgia and Texas. I own a real estate team. I'm a co-founder of a brokerage, and I also teach people how to invest. So, and I homeschool my kids. So I'm like, you know, I'm all over the place doing different things.
Yeah, that's that's quite a bit. Usually you don't hear most people they're either say on the agent side or maybe they'll dabble in that, but they'll also be the investor. But it sounds like you're doing really everything from, owning their own brokerage to going out and doing your real estate investing to teaching other people how to invest and then even homeschooling. I could imagine that your plate is pretty full in quite
Yes,
quite amount of time.
it is. It is. I'm actually trying to do less, but
Yeah.
I'm very much a multi-passionate person. And even when we get into my story, I believe in ownership, but I don't necessarily believe in doing a lot of things, like giving my time to a lot of things. So, hopefully we'll get to talk about like the things that I'm actually actively involved in day to day, and the other things I just kind of collect income from.
No,
So,
certainly, I get that. I feel like a lot of times I have all these ideas and I want to go off and start different businesses. And then I realize, like, okay, it's a good idea, but I want to make sure I have that team in place before I go off
yes.
and bite off more than I can chew. I'm like, oh, it'll only take a few hours. But then when you have all these ideas and you realize, okay, when I'm investing money, I want to make sure I'm getting a return on that investment. And it's
Yep.
taking a lot of my time. But it's funny that you went from being, going out and getting your real estate license and then investing in real estate. I was kind of thinking about that back in my own way where I went out and got my real estate license and then I realized I didn't, I mean, a little bit helpful, but didn't necessarily need that to invest
Yeah.
in real estate. And that was my whole thinking
Hmm.
behind that. And you go through the whole test and then you realize, like, okay, I can tell you how far a carbon monoxide detector has to be from every doorway, but that doesn't help me when it comes to analyzing these real estate deals. But before we
Yeah.
dive into the real estate investing aspect and everything you've done there, I'd love to learn how you've grown Strive Real Estate Group and how that experience has been.
Yeah, for sure. So when I worked in banking, I managed a team. And so I definitely seen the value of like being able to get more things done when you have a solid team. So a lot of those skills that I acquired while I was on the corporate side, I definitely took it to transition when I made the transition to real estate. And I knew that I wanted to end up being an investor on the investor side, but I just needed kind of like a place to be able to have the income so that I
Mm,
can build up my business. So I knew pretty like fast that I wasn't going to just try to be a real estate agent for a long time. So I knew that I needed to build a team so that I could like have income from the real estate income, but then I can really focus on building up my portfolio. And so that's what I did. My first hire was an assistant. And I always recommend like your first hire and being someone who does admin, especially if you are a sales acquisition type of person. Generally we don't necessarily like the administrative part of the thing, and so I didn't want those things to fall through the cracks. So I hired an admin slash marketing person, and then I was like, I want to build a team. I want to be able to like multiply myself because I don't want to do this long term, but I still want to be able to like take advantage of the income that does come from the sales side. And so I started recruiting. I again used my same skills that I learned as a manager in the banking industry to look around me to see like other people who had sales skills that could be transferable to real estate. And so I actually started recruiting. I recruited a good number of my first agents from like church, from friends who I knew that were in sales that, didn't have like a solid career, and just started meeting with them, getting to know them to see if they would be a good fit for joining my team. And then I started mentoring them while I was training them to be a good agent.
Yeah, I like that a lot, and I can't agree more with having an assistant. That was big for me as my company has grown and I've hired on more people. It doesn't sound like like right now we're like 8 or 9 employees, and it was fine. But then all of a sudden, when they start to email you, and each one has 2 to 3 questions a day, then now I have 25 emails coming in a day that I need to answer, and then not that it takes a long time, but it could take an hour and a half, 2 hours
Yeah.
out of my day. I was like, okay, I need to go off and hire an assistant. And that's been like the best thing for me.
Yeah.
Well, she'll go through, she'll basically clear out my inbox. And if there's anything important that I need to answer, she'll leave it in there for me. So I know at the end of the day when I open up my email, okay, I have 3 or 4 emails that she didn't know how to answer, or they just need my input and not her
Yeah.
input. So that was super beneficial hiring an assistant, and it's well worth the money. To buy back that time to be able
Hmm.
to focus on other things. Where in the beginning it doesn't seem that important, but as you start to grow, you're like, I really need to have
Yeah.
that assistant coming in. But that's fascinating how you were able to grow your brokerage company. And then now on the flip side, when it comes to real estate, are you investing in, say, single family rentals? Are you doing multifamily? What does your portfolio look like?
Yeah. So it's kind of half and half. So I have multifamily and I have single family properties. I have a good number of just single family homes, and I have some kind of small, like quads, duplexes, but then I also have an apartment complex as well. And they all, it's different. It is very different. And I also have land as well. So yeah, so I'm kind of all over the place with that. And we do some flipping just for, additional cash in between, especially in this market right now where it's a little bit more difficult to find like long-term deals. So yeah, that's a good representation of my portfolio.
Yeah, I like that. I like that a lot. And it's interesting you mentioned Georgia and Texas. I particularly like those markets, especially for someone like myself. I'm in New York, where I enjoy living here, but I wouldn't want to be investing here. They're not. It's not the
Yeah.
best if you're if you want to be a landlord. And
I'm
also
not
the
going
numbers.
to be, yes,
Yeah,
they are not
exactly.
landlord friendly. Texas and Georgia are a great landlord states.
Exactly. Even like I was living in Massachusetts and I was trying to find a fourplex to live in and basically house hacking. I'm like, who is buying these properties? Like the numbers do not make
Yeah.
sense where they make sense, and that's why for lack of a better term, more your conservative states, more your red
Yep.
states down
Red
south,
states.
the
Yep.
Midwest, where those are typically ones that the numbers just make a little bit more sense. And is that why you
Yeah.
sort of chose those particular states, just because the numbers make sense? They're a little bit more landlord friendly,
Yes.
and they're growing markets.
Yeah, for sure. A number of things. More landlord friendly states. Can you hear me? Okay, you can. They are more landlord friendly states where I don't have to worry about like, like we hear those horror stories in California about like the tenants like squatting and taking over the properties. Like, I'm very much like am the first person in my family to do this. So I don't I have to like figure it out. I don't have a lot of like cushion to just be paying mortgages, on my own. And so it's a lot less risky. And then also Georgia, specifically Atlanta, where I live, and also Texas, Dallas, where I invest. Those are huge like growth markets where like jobs are like always on the high. And so those are just like really good factors to consider when you're thinking about your market. And so two really great markets as far as that, super solid. So those are the primary reasons why we invest here.
Yeah, I like that. I like those markets. I definitely like Texas. So it's always definitely harder to find properties now. I find for me when I'm looking to
Yes.
passively invest in those states, but I still have one property in there, but that was through passive investing. And I know you mentioned you have a different portfolio of multifamily and single family and land, and then you have even done some fix and flips. Is there a particular asset class that you like most out of those couple ones, or is it just you like to just
Mhm.
dip your toes because they're all, multifamily is going to be a little bit different than single family, and obviously land's different going to be from fix and flip, where I would imagine it's probably going to be a little bit more hands off and more fix and flip. I would imagine it's
Yeah.
going to be a little bit more work. So curious why you, if there's a particular asset class you like, or you just like them just because they're each a little bit different and how they bring in the income.
No, that's a really great question. I would say that my favorite, especially now that I've done so many different things, is the small multifamily. So like your quad, your triplexes, even duplexes. Like here in Atlanta where I live, we don't have a bunch of like true multifamily properties. So we do these like single family conversions where we'll like take a 1 unit property and turn it into two with like a basement or an ADU kind of thing. So whether it's like a duplex or like a quad, those when I look at my portfolio, from a stability and even cash flow perspective, those properties like tend to like do like perform the best, even with the apartments, because the apartments is great because you have like more units. You generally don't have to pay as much property taxes because it's like, it's all in one parcel, but the turnover is much trickier. It's harder. It's always someone moving in, always someone moving out. When you have like, when you have to replace, HVACs more frequent, things like that. So I would say those small multifamilies tend to be like my favorites right now.
Yeah, like that. And I always find I feel like there's sometimes less competition going after that, where sometimes I talk to investors and they want to go after the 80, 100 unit apartment complexes. But I also feel like your institutional companies like BlackRock also wants to go off and buy those
Yeah.
80 to 100. So there's a lot more competition, where I've heard that when sometimes you're looking at 20 units and under that, sometimes it's easier to get a little bit better deal because these bigger investors, they don't necessarily, not that they don't want to buy those properties, but they'd rather go out and buy a 100 unit apartment complex than buy, say, 25 4 units that are out there. So I always find that interesting there. And as you're growing your
Hmm.
portfolio to say like almost 40 units or so, what was that sort of process like? Was it just going off and buying, say, that first multifamily and then going to the single family and then sort of, or just, as you sort of came across these deals, and then was it going through and maybe like, I know they have like the burst strategy going out there and pulling the cash out of it? Or was it taking on any investor capital on the deals that you were finding? Just curious how you were able to grow your portfolio over time.
Yeah, that's a great question. So I very much started out like small and then like worked my way up. So started out just lots of single family homes, burr deals. I basically have been burring before I even knew, of the term. Because I like to buy value add properties and force the equity. I prefer to not buy properties that need like full gut renovations. Like I learned pretty quickly that I like properties that have been like previous rentals because they at least been lived in, and then I just update the systems. And like over time, from a repair standpoint, that has really like served me well. So I started out like single family, kind of small, and then I just continued to like challenge myself and grow. So then that's when I went into, more like big renovations. And then that's when I went to like, properties with more units. And then like my first quad is when I first brought on a business partner, which was, I was probably at about 20 units before I brought on a business partner. And then from there, the business partner helped me to scale because I brought the operational side to the partnership, and then they brought the cash. So I was no longer having to rely on my own cash or my equity, and so we were able to like scale to the next 40 units much faster with the partnership. So that's basically what my journey has been like.
Yeah, I like that a lot. And I like that you went off and you were doing it on your own. And then as you started to grow, you brought on this additional partner to go even further. I think sometimes I see a mistake when you have these newer operators that are out there is they come in and they bite off a 100 unit apartment complex and they're raising the capital, but they don't sometimes necessarily have that experience, which, and it's easy to say back in 2020, 21, either you or I, we could go off and buy a 100 unit apartment complex and get a 2x equity
Yeah.
multiple in a year or two. It was nice and simple, but I feel like there wasn't as much of a learning curve where you have that boots on the ground, you have that experience. It's like, I know what I'm doing now. I'm just continuing to grow it. And I'm just bringing on some of this partner to come on and help me out. And as you're growing your portfolio, and let's say someone in the audience is maybe they have a few units under their belt, or maybe they're just looking to get started, are there any common mistakes that you see with people when they first start investing? Is it taking too long? Is it not analyzing the deal? Just curious what your thoughts on what you'd recommend to someone or mistakes you sometimes may see a newer investor make.
Yeah, for sure. I think one of the biggest mistakes I see people make all the time is that they don't have a solid buy box. Like if you ask them, like, what is the criteria that you're looking for a property? They mention like four different markets, like they don't actually have a specific buy box of what they're looking for. And so because they don't have a focus, they aren't able to be successful because they're all over the place. So, and they're maybe relying on like an agent to send them a deal, which is like the worst thing, like as an agent, whenever I had clients that came to me or come to me that they specifically know what they want, I'm able to help them be more successful. And so it's the same thing as an investor. So I would say that. And then secondly, lastly, is not really understanding their numbers, not really truly understanding how to underwrite the deal. A lot of us, we are, we're go getters, we are risk takers, and you have people who have like rose colored glasses. And so they don't know how to do ARV, they're trying to choose, they're pushing the market when they need to actually be a lot more conservative just because they're looking for a deal. They're just on, I want a deal, I want a deal, I want a deal, but they aren't running the numbers, and then they flip it and lose money, or they buy a property and then they end up having to constantly put their own money in, and they're not cash flowing. And then they come to a person like you and I, and they're like, "Can you help us?" And then I'm like, "Well, who did you talk to at first?" So it's like, get the mentorship on the front end, instead of like backtracking, because it's so much harder to do that when your HELOC is locked up now, like all these things, because you were trying to force a deal to happen that really wasn't a deal to buy from the beginning.
Yeah, that's spot on. And I can't agree more with at least knowing the underwriting. And for me, where even though I'm a passive investor and when I'm going through the slide decks that I get sent from investors, I want to at least be able to run through the numbers and get an accurate estimate. Like, yes, these numbers make sense, or no, these numbers don't make sense, and why. Or you just, and it probably took me probably about 6 months or so of underwriting deals. Pretty much, I'd underwrite one deal a day, or I'd go through the financials of one deal a day, and I just use Marcus and Millichap. I went on their brokerage and would find different apartment complexes located around the country, and I would underwrite the deals to see if they made sense. And it was just getting that practice for me to have that confidence. Okay, now when I'm going out and investing with this particular sponsor, and I can take a look at their numbers and it makes sense. But I agree with you there. That's definitely something you want to know. You don't want to be thinking you're going to be doing good on a deal, and maybe you don't account for vacancy or capex or any number of things that I think
Mm-hmm.
sometimes people look up. Hey, the mortgage is 1,000 a month. I'm going to be collecting 1,400 a month. I have $400 a month in cash flow. I mean, I wish it was that simple. It'd be nice if the math just worked like that. But there's definitely a lot more you'd have to work with there.
Yeah,
And
for sure.
let's
I agree.
say And let's say someone is going off there and they're looking to do their first investment. Is there an investment that you'd recommend that they start off with, whether it is the burst strategy going single family, or maybe it's doing a simple house hack with a burst strategy added on there as well? Just curious to get your thoughts on the investment that you'd recommend someone investing for the first time to make.
Wow. So I have coined this term that I need to trademark called the step up strategy. And to me, that is like the easiest way for someone to like dip their toe into real estate investing. And so essentially your current property becomes your rental property, especially if you live in a place where
Mm.
you own your home. You can move into another property, take it, and I like, especially right now, like take advantage of these like builder incentives, and they're paying your rates down and all that, those types of things. Like buy in a subdivision, like in the first couple phases, so you can like take advantage of future equity, builder to buy down your rate and all that stuff, and then turn your current property into a rental property. So I call that the step up strategy. I feel like that's the easiest way for someone to jump into real estate investing. A couple of things: you've been living in the property, so if you've had some type of maintenance thing or something that's come up, you most likely have taken care of it. So you're going to have lower maintenance costs. If you bought your house prior to 2022, you probably have a really low interest rate. And so most major markets have appreciated quite a bit, so you can take advantage of good cash flow. And then you just already know that property, you know the quirks. You're able to, sell it to a tenant better because you've been there, you've lived there. And so I tend to think that that is like the very easiest, best way if a new person is thinking about investing, of how to jump into the game.
Yeah, it's an excellent strategy, and it's funny. My aunt, she moved from Florida to Colorado, and is basically doing something similar to that. Renting out the property in Florida and then moving into a new house in Colorado and just keeping it. I don't know if she meant to do that on purpose, but I think they just wanted to have that property in case they ever wanted to go back. But it sounds
Yep.
pretty similar. But I like that. I like that a lot, and it makes sense. Where if I've been living, like my wife and I, we've been living in this house for 2 years. I know the nuances. I know, hey, if there's something wrong with plumbing, I know who to call. If there's something wrong with the HVAC, I know who to call just from prior experiences of having problems of being a homeowner. So I
Yep.
really like that strategy a lot. But Erica, I wanted to say I really enjoyed our interview today. And if there's someone out there that's looking to learn more about you or get in contact with you, where should they go to?
Yeah, I would say two things. One, follow me on Instagram. I'm very active. I share lots of free information. It's Erika, Erika Brown Investor, on Instagram. And then also, I have a podcast called Wealth Within Reach. And so you can listen to my podcast. I talk about these strategies. I just talk about building wealth in a different way, just all together. So I have really great guests. So I would say that, and yeah, so they can connect with me there.
Awesome. I'll make sure to include that in the show notes of today's episode. And again, thanks so much for coming on to the show today.
Thank you. Thanks for having me.